What's up, everybody? Tain here, back again with Expat Files podcast. Thanks for being here. My special guest today is Olivier Wagner from France, who's also a U.S. citizen and a Canadian citizen, it turns out. And he's going to talk about tax mitigation for expats. Now, this is obviously a very, very important topic. It may not be the sexiest thing to talk about, but if you have a U.S. passport, you know you have to deal with this worldwide taxation. And Olivier has a really cool system that he shared with me as we prepared for this call, the three legs and the different ways that expats, especially U.S. expats, are mitigating tax obligations by going abroad. And so he's going to share that with us. I think you're in for a really nice surprise because it's actually very, very helpful information. And obviously anybody who's thinking about even just creating a second home or a way out of the U.S., even for a brief period of time, you're going to need to know this stuff. And so this is very, very valuable. And then at the end or after that, we're going to talk about what I think is still the most controversial topic, which is renouncing U.S. citizenship. There are people with very strong opinions and very strong emotions around this. The notion of sort of what do you owe your country always comes up, and the issue of patriotism. But I think it's especially appropriate to discuss now because obviously, the people running the institutions of our society these days it is almost like there's an open declaration of war against the population. In the last several years, certainly, at a minimum, you could say that the sort of emergency of COVID was greatly, greatly exaggerated. And there's all kinds of evidence that the state made big power grabs. And so people have strong feelings about whether or not it's time to leave. And so I'm going to leave that up to the discussion for later. But I promise you this, Olivier has very interesting, surprising things to say about it. The people that he encounters who are actually making the step to renounce are not the people that you think. So that's coming up after. But Olivier, welcome. Thank you very much for being on the podcast. I'm so happy you're here. This is actually a very, very important topic.
Thank you for having me. Yes, I'm glad.
Excellent. And you're down in both of our favorite places, which is Mexico City, which is just a phenomenal place to travel to. I'm headed down there myself here in a couple of weeks. And do you travel there a lot? Do you have a lot of comings and goings in Mexico?
Yes, I'll be there most of the time for tax season. I'm usually based out of Toronto, Canada, but I decided to go there this tax season, yes.
Nice. And so you're there for expats who need to get their taxes taken care of.
Right.
Fantastic. Yeah, interesting. Okay, well, you can tell us more about Mexico City. I love the place. Most people don't know this, but it's a super green place. Like, it's really, really nice in and around. I stayed around Polanco, which is by the big park and the museums and all the rest. It's as nice a city as you're going to find anywhere in the world, and quite cheap still. So fantastic. Let's start with your three legs, right? You talked about the three legs when we spoke. Please break it down for people. What are the three legs? And then give us a detailed sort of breakdown about the different ways that expats can mitigate tax obligations using this kind of thinking.
Right. So that's just a phrase to refer to the fact that Americans overseas have three ways to avoid paying US tax. The first one is the foreign tax credit. The second one is the foreign income exclusion. But you need to meet one of two tests to use the foreign income exclusion, which gives us the two other legs. So the first one, the foreign tax credit, is the easiest one. You just need to pay tax to a foreign country. That's my favorite for people who live in Canada or Western Europe, where they pay tax rates at a higher rate than the US. And it's very flexible. There's no maximum dollar amount that you can apply to any kind of income as long as it's foreign income. It can be investment income, rental income, wages. The only requirement is, and you can travel as you wish as well. The only requirement is indeed that you need to pay income tax to a foreign country, and then you get a dollar for dollar credit for taxes paid to that foreign country. If the tax rate in that country is higher than the US, then that would fully offset your US tax liability.
So it has to be higher. It has to be higher than what you would pay in the US. In other words, if I owed a US government 50 grand, I would only get the foreign tax credit if I was paying Spain 51 grand.
So if you owe Spain 51 grand, you will not owe the US anything. If you owe Spain 45 grand, then you would have to pay the difference of 5,000 to the US.
Ah,
So,
okay.
so it needs to be higher to get down to zero. If it's less, then you pay the difference. You can still use it,
Interesting.
but you will have to pay the difference, right?
All right, so everybody gets that. Like in other words, you take the higher of the two, and if your U.S. taxes are uh, higher than what you would pay abroad, then you're just paying the difference.
Right. At the end of the day, you still end up paying the higher of the two weights. It changes the place you pay to,
Interesting.
which
Okay.
might not be what our listeners are going for, rather than
Right.
paying taxes elsewhere. They might be more interested in not paying tax at all.
Hmm.
So that brings us to,
But before you move on, but there are obviously situations where, hey, my U.S. tax obligation is almost nothing because I don't know, maybe I'm a retiree or I'm living off, small amount of dividends or whatever, and so I pay this tax in wherever, Spain, let's say, for an example, and my tax obligation in Spain is fairly low because I'm not making a ton of money there. I'm living as a retiree or a pensionista, and so I don't really owe a ton of tax either way. So in other words, there is a way where that's actually really beneficial for some people, right?
well, I mean, if you don't have much income, you wouldn't owe much tax
Period.
regardless.
Right.
Right.
Period. And who are the people who use the foreign tax credit then? Like, give us an example. Like, what's a typical scenario where that works for somebody in their favor?
Well, that's expats who move to countries that have an higher tax rate um, than the US, and normally they don't have to pay state income tax 99% of the time. I mean, there's 50 states. I won't go into details, but you will get a foreign tax credit for taxes paid to the foreign country and political subdivisions. So you would get a credit for taxes paid to Canadian province, for instance, and offset your federal tax. So that's one more reason why the foreign tax rate in Canada would be higher than the US, for instance. So to get back to your question, that's people who just left and have a stable life in Switzerland, the UK, Germany, Canada. They have a stable job, they have a spouse, all of their life is there. They pay tax there because that's where their life is. They are tax residents there. And when it comes time to file their US tax return, they claim the foreign tax credit.
Yeah. Okay. Yeah. So I mean, so that's a category of people who are obviously going to benefit from that. But basically, because your life is already set up overseas, even so, you are a U.S. citizen, but you're already living overseas anyway, and so you're just filing there. But you have to be a tax resident of the place, obviously, that you're the foreign country that you're paying. So that means 183 days, right? Pretty much in any country, that's going to be a minimum requirement. Is that correct?
No, you get a credit for taxes paid as a non-resident as well.
As a
If
non-resident
you
as well. So whatever your
right,
tax country that you're claiming, regardless
right.
of the presence test.
If
Yeah.
you go to Canada for 2 months and you have employment income, then you will be able to claim a foreign tax credit for the taxes paid to Canada as well. But
Okay.
going to Canada for 2 months will not make you a Canadian tax resident.
Cool. Okay. That's
Right.
clever. Okay. Good. Yes. Continue, please.
Well, so the next two are subsets of the foreign income exclusion. So the foreign income exclusion is a little bit more limited. You can exclude up to $120,000 of earned income. Earned income would be wages or self-employment income. You cannot use the foreign income exclusion against investment income, rental income. You cannot even use it against pension income. It has to be earned income, wages, self-employment income. Right. So the second leg, which is the first test for the foreign income exclusion, is the bona fide residence test. That's when you are an actual resident of a foreign country. You spend at least 6 months on the ground there. You have various ties there. You have a stable immigration status, something that lets you work there for at least a year. You are a tax resident there. It's um, it's a little bit more subjective than the physical presence test, but that's my interpretation of it. And that would be most appealing for people who actually live in a country, but that country does not have income tax at all, or at a rate much lower than the US. So most countries in the Middle East would not have income tax. Singapore, Hong Kong would have income tax at a rate of 15 or 17%, which is a lot less than the US. So people living there full time, or at least 6 months of the year, would claim the bona fide residence test of the foreign income exclusion, and that would allow them to exclude up to $120,000 of either wages or self-employment income.
Wages or
Self-employment income.
supplement income of some kind. So what would that be?
Self-employment, so that's when you run a business in your own
Self-employment.
name. Right.
Right. Wages from an employer or self-employed income. So for my audience here, and I know a lot of people know this, but the foreign income exclusion, foreign earned income exclusion it's currently at 120, and you get a housing allowance with that too.
Right. So if you earn more than that, you can use the housing exclusion. So you need to spend more than $49 a day in housing expense.
Okay.
Only the excess can be excluded. So for people who live in Singapore, Hong Kong, or some parts of Switzerland where the cost of housing is fairly high, you would be able to use the housing exclusion. It does help the cause, but it doesn't move the needle too much. Because
Really?
again, the first $49 per day don't count.
Yeah. Okay. So you would have to
It's
pay a minimum of almost $50 a day for your housing. But of course, in a place like Singapore, you're going to be way over that. You're going to be paying $300 a night,
right.
probably plus. And so, but what is the cap on the housing exclusion? There's a limit?
Yes, it depends on, if you look at the instructions to Form 2555, you will have various cities around the world and countries listed with differing max, but again,
Okay.
we don't usually meet the max. But yes, if you have a huge mansion, you wouldn't be able to exclude all of the cost either.
Right. Okay. I seem to recall, like, for some reason, like the 18,000 or something like that sticks in my mind. So that would be essentially like I'm not saying that that's accurate, but if you wrote off $1,500 a month for housing, well, it's not nothing. That's actually a significant amount of money. The foreign income exclusion, 120,000, and it applies to your spouse. So if both, right, like if both,
Right.
uh,
If your
if the
spouse
couple works.
is likewise a US citizen, then they can use it as well. If they're not, they are out of the system. And you can make an election to bring them in, but 99% of the time, why would you do that?
Right.
Right. So you each get $120,000 to exclude. If you file jointly, you would have two separate forms, 2555. If one of you makes $200,000 and the other one is unemployed, you would only be able to exclude 120,000. But if each of you make 100,000, then you would be able to exclude 100,000 each.
Yeah, so there you go. So 240,000, essentially, that is not taxed at all, right? If both people are working and you're making that kind of money, your first $240,000 would be tax free.
Right. If you would not pay any income tax on that. If you're self-employed, then it would be a separate discussion about social security tax.
Okay.
But yes, you won't pay any income tax on that.
Okay. And what is the separate discussion on Social Security? Obviously, this is another controversial topic because by the government's own admission, the Social Security fund, which isn't really a fund, but right, I mean, there's no money in it, right? But they're saying that it's going to be empty, right? The money that was set aside for that is going to be empty by early 2030s, and that's barring no other explosion and money printing and disasters and emergencies. So. Talk to us about the Social Security obligation for U.S. taxpayers.
Right. So if you live in a country that has a social security totalization agreement with the US, you will be liable to pay social security there, and you will not pay social security to the US, regardless of the structure you use. So you could be self-employed and not pay social security to the US. There's not that many countries that have a totalization agreement with the US. There's maybe 26 of them. I kind
Is
of
Mexico one of them?
no, actually, Mexico is interesting because they signed one in the 1990s, and it has never been ratified by Congress. Therefore, it's not in force. So Mexico is
What
not one
about
of them.
Panama? I mean, these are popular destinations. Let's just run through a few countries
No,
in
that's essentially the Western world. It's Canada, Western Europe,
Okay.
Australia, Japan.
Yeah.
I like to think of it as countries that are wealthier than Poland. Poland has a totalization agreement with the US, but Romania and Bulgaria, even though they are part of the EU, do not have a totalization agreement with the US.
Interesting. That's interesting.
Yes.
Um, okay, so just to sum up for people here, so you're maybe you and your wife think, hey, it's time to perhaps look at setting up a second home base in Latin America. Let's just say Mexico for the sake of argument. And you're self-employed, or you can work remotely. You decide you're going to do it. You move to a place. You're both making very good money, or reasonably good money, good six-figure salaries. You're writing off the first $240,000 are tax-free. So let's just say you make 150 each. You're paying tax, or that couple is paying tax on $60,000. And let's just say they took a $10,000 housing exclusion as well to pay for a place in San Miguel Allende, for example. And so they're only being taxed really on $50,000. What is that taxed at? The normal rate that they would pay, or is
So,
it taxed as if they made $50,000?
so the good news is that you still get the standard deduction on top of everything we've already discussed. So for somebody married filing jointly, that would be about $23,000. So out of these $50,000, only 27,000 would be taxed. The bad
Wow.
news is that you will be taxed at the rate up there. So that would be, you'd be at close to 30% at that point.
So
Um,
so your $27,000 would be taxed at 30%, which is still not terrible, because obviously you've excluded so much of your income, but the 30% tax rate is brutal.
right. Yes, a few decades ago, they didn't have that provision, and then you would start at 10%, the original tax bracket,
Yeah.
but they closed that loophole, and now you need to include that income for the purpose of determining what your tax bracket is for the income that is not excluded.
Yeah. 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 That's very interesting. Okay. Awesome. Um, let's shift gears for a second, because I do want to hear your opinion. What do you see? Obviously, you travel, you talk to a lot of expats, you talk to people coming out of North America. You want to tell a little bit about your story, how you came from France, how you came to the US, also emigrated to Canada. Talk about sort of your trajectory, and also please share with people, like, what are you seeing today? What's happening in the world today? And then we'll move on to our other topic.
What I'm seeing in the world, well, my story, I grew up in France. I I was a French citizen, French parents and everything. I lived there until 2004. I was 24 years old at the time. Then I moved to the US. I used the dual diploma program, so I have a US diploma as well. I worked at Moody's, the credit rating agency in New York City. I was there during the financial crisis in 2008. That was interesting times. I became a US citizen in 2009, and in 2011 I moved to Canada. And between the financial crisis and some HR moves, I kind of wanted to work for myself and be location independent and all of that. And that's where I saw the opportunity of becoming an accountant, tax preparer, preparing tax returns for Americans who live overseas. And the thing is that Americans who live overseas can be anywhere. So they don't necessarily have an accountant in their town to prepare US tax returns.
Right.
So because we're talking about a good 10 years before COVID-19. So working remotely was not as widespread back then, but I saw
Right.
that as
Right.
a good niche to do that. So I immediately became an enrolled agent, which is a designation given by the IRS. You would need to pass an exam that is very similar to the tax portion of the CPA exam. I then joined an accounting firm in Montreal, became a CPA, and I lived the digital nomad lifestyle from 2015 to 2018, and moved back to Canada, became a Canadian citizen in October 2023. And that's my story essentially.
Wow, Montreal is such a good town. What a great choice. I really enjoyed my time up there as well. And so, where are expats going? Like, obviously, you have a bit of a migratory route. So, you head down to Mexico for tax season. And what are you hearing from people? What do you see happening in the world? What's happening for your clients and people who are contacting you? What are they talking about? What can you what kind of color commentary can you provide on sort of what you hear and see, people either expatriating out of North America, the U.S. and Canada, or what are people talking about the tremendous ugliness that's staring us in the face right now?
Right. Well, I see the digital nomads, people, um, living using the physical presence test of the FEIE, but there's still a small portion of my clients. Most people still want to be settled somewhere and live a normal life. And based on the various things I discussed, oftentimes it's not even the taxes per se that drive them to give up US citizenship. It's the forms they need to complete and the way US citizenship restricts their investment options. So if
Mistreats
you their
mistreat.
investment option
Yeah, right.
restricts their investment options, right?
U.S.
So
people can't invest in certain places and certain things. I mean, this is something you run into all the time. If you're a U.S. investor, right? It's like, oh, this is off limits to U.S. investors. This is illegal for U.S. investors, right? Not illegal, but
right,
I mean,
even if you find a financial institution that will accept you, mutual funds, ETFs are oftentimes regarded as PFIC, which is a very punitive taxation regime. If you don't make an election, you hold it for a decade, you can easily have a 50% tax rate.
wow.
And and there are people even in Canada who, create a corporation, wants to start a business in their name, and they cannot fully take advantage of the tax benefits that Canada provides because the way Canadian tax law and the way US tax law are designed, kind of you need to structure your business differently, right? Canada will give you incentives to leave your retained earnings inside the corporation, whereas the US will tax it, will call it Subpart F or guilty income. And so they need to take it out to avoid this US tax, but then they also avoid the tax-free capital gains that Canada would have provided. Canada would have provided anybody in their shoes who were not a US citizen.
What do you see coming? What do you see coming? I mean, obviously, it's the math doesn't work. 34 trillion in debt, $2 trillion deficits. As far as the eye can see, obviously the world's getting very nervous about the people running the U.S. financial system and the monetary system. What do you see coming? I mean, are people do your clients also recognize and look at this and sort of, because my feeling is like there has to be a moment out there when the penny drops and people look and go, obviously this debt is going to be like somebody's going to have to pay. They're going to default on a big portion of it, but at some point, and the hiring of 87,000 IRS agents. I mean, this is a very clear tell. What do you see and our clients also talking about? Like, is there any dawning realization like, no, this is not going to end well? Do anybody talk about that with you?
But it's the compliance cost. It's all of these forms that have to be filed, all of these inter-revenue code provisions that the IRS didn't really have the resources to enforce until now. And there is that increased fear that the IRS would enforce those.
It's coming. Yeah, it's coming. Is that your opinion as well, professionally? Do you think like, yeah, there's going to be a lot of cracking down?
There's going to be some. I mean, not all 87,000 iOS employees will perform audit. They will also improve, you know, customer relationships. I mean, it's crazy. I'm actually using a
Yeah,
service to bypass the wait time at the iOS. So there's like
you're,
a robot that waits in line to get on the call, and then I would call that number and I would pick up the line that has already been waiting for an hour so that I have a reasonable wait time to talk to an IRS agent because
Wow.
if I call the regular number, it would take me an hour or two before I could talk to someone. It's crazy. So,
Well,
so there's some of these deficiencies that this budget will also help, but it's better to not have to deal with them in the first place.
Well, we know that they're arming some and giving them firearms training. So I'm assuming those will not be the customer service reps. But yeah, I mean the whole thing is very sinister. The whole thing is very. The IRS exists for one reason only, which is to take money from U.S. citizens. That's it. That's their whole purpose. And also, obviously, it's like a lot of government agencies, they're being weaponized. This is not new, right? It's if you're on a wrong political side, right, you may get a call from the IRS. This is not That's not a controversial statement anymore. That's exactly what is happening, and government is being weaponized against political opposition, and that's dangerous. That's banana republic stuff. So if I want to hire you, my wife and I moved to Mexico. We make great money. I want to hire you. What do we do? Like, you actually are you making house calls? Are we doing this over Zoom? What does it cost me to retain you and to save me a bunch of money on taxes?
Yes, we can have calls over Zoom. You would go to 1040abroad.com, 1040abroad.com, and there's a contact form. My assistant will give you the first steps, and you can request to have a call with me. Yes.
Okay, and that it's that easy, yeah. And what is a typical retainer like? Say we're a family of three. I have one child. There's nothing really complex about it. Like, I'm self-employed, so we write off a bunch of tax, and you prepare the forms. What does it cost me relative, like in a range of from what to hire you?
Well, actually, I'm aiming to use flat fees as much as possible.
At least,
I,
okay.
yeah, I know that my competitors, charge by the hour, by the firm, and it's only after the work is done and you receive your invoice that you know what the
Yeah.
amount is. For a basic tax return, my fee is $400. For the F bar, it will be an additional $100. If there's a foreign corporation, a trust involved, that would be additional fees. I charge $500 for a Form 5471 because even though it's attached to a personal tax return, it's very similar to a corporate tax return. So I have to charge extra for that. But yes, I mean, if you're
Very reasonable.
self-employed,
Yeah.
use the foreign income exclusion, $400 for the tax return,
Yeah.
$100 for the FBAR.
Yeah. Headaches with cryptos. I mean, obviously, you're dealing with digital nomads. Is all of that very straightforward for people at this stage, especially if you're an expat?
Well, the reports that the exchanges provide are not always designed to match a purchase and a sale. There are websites such as Coinly that would allow you to take the data you receive from your exchange and convert it into the sort of data I would be able to use to prepare your tax return.
And what resource is that again?
Coinly, Koinly.
Right, Coinly. That's .io probably,
Right.
.com.
I believe it's .io.
Yeah. Okay. Okay. We'll have to get a list of links and resources. So I'll email you separately. We'll make sure that gets up posted with the podcast. Let's move on. I'm curious to hear your take. Obviously, my position on renouncing U.S. citizenship, renunciation of your citizenship, especially if you're a U.S. taxpayer. There are horror stories about it. People have strong reactions to it. Um, should you give up your a valued citizenship? Because the U.S. is a disaster right now and looks like it's headed down a very ugly path. Um, it's an interesting topic. I mean, for hundreds of years, obviously, people went to great lengths to get into the U.S. And now you see people, at least in some corners, right, deciding that it's not worth it anymore. I want you to talk about your experience with it. But I'll just give you my position here on this. My feeling is all forget the fact that the U.S. is an empire. Like, all nations go through highs and lows. We're obviously being run by kleptocratic imbeciles and like inspired idiots, right? If you think of it this way, and so there's a lot of probably things that are going to break and tough times. But North America is so blessed. I mean, it's so the whole concept of citizenship and passports is so ridiculous anyway. But if we have to play that game, it seems like it's a good place to hold on to. And I know you have a counter argument to it, which is because your clients actually clearly have reasons why it makes good sense for them to actually renounce. Talk about the kind of people that you see renouncing, because this actually surprised me. This I thought was interesting.
Yeah, actually, it's not the profile that makes the headlines. I mean, there was Bitcoin Jesus who made a lot of money in cryptocurrency and vowed to send kids citizenship and then gave up his US citizenship and to pay quite a bit in exit tax, by the way.
Yes.
And then,
What is the exit tax? Why you mention it?
oh, right. So it's a deemed disposition of all of your assets. So there's a $780,000 exemption on your capital gain. So you don't have to pay tax on the first dollar of capital gain, but you have to pay tax from the first dollar of pension you have, which will be a benefit you get in the future. So you might not have the money there to make that obligation. So that applies to what is called covered expatriates. So these will be people with a net wealth of more than $2 million. So sometimes there's some planning that can take place to bring you under that $2 million mark, such as gifting assets to a spouse before renouncing.
Is there a way to structure trusts and everything? No, because ultimate beneficiary is still going to be the person renouncing, right? Like, is there
Right,
any
right,
way?
right.
Yeah.
I mean, a non-grantor trust for the benefit of a children would not be included, but a grantor trust or any trust for which you're a beneficiary would be included on that balance sheet.
Yeah. 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 This is a whole topic by itself. I'm sorry. Continue.
Right, so these are the people who make headlines, but actually my clients and most people who renounce actually have more straightforward life. A lot of them live in Canada, also have people in Western Europe, Australia, and they they have their life there, they have their family there, their careers there, they have lived there for decades, and they still find themselves having to file these US tax forms and having to plan their financial affairs considering US tax implications, and that's what drives them to renounce.
Yeah. Yeah. And that's a fair amount of people who fit that, right? Or do you see people who their lives have been set up that way for decades and they're just kind of getting around to it because they reach a certain age? It's like, no, we've lived in Australia for 9 years. Like, why am I paying you? Why am I filing these forms for US taxes? Or do you see people also going and like, you know what? We've had enough. We're leaving. We're going to, Uruguay, and we're renouncing, right? Do you see both kinds? Or do you see people who basically did this a long time ago and are just getting around to renouncing?
Usually they renounce after having lived somewhere for some time. And
Interesting.
they have another citizenship that they acquired either at birth or via residency. So you mentioned the strength of the US passport. If you have a Canadian passport, it provides essentially the same benefits as a US passport.
Hmm.
A European passport might have slight differences in the way you can get to Brazil or Iran, which you can't with a US passport, but then a US and Canadian passport can give you a 10-year Chinese visa, which a European passport would not. But in the grand scheme of things, these are all very good passports. If you have such passport, you can
Yeah.
give up your US passport.
Yeah, exactly. Exactly. My point is, the wheel of history will turn around and that you may end up wanting that. And also, the argument from, and again, it's not an argument, but I'm saying that this side of the discussion of the debate is that it's still valuable. Like it's still a valuable that you want more options. You don't want to cut your options by renouncing citizenship, but you have to weigh this against. I know you said also some of the people that you see renouncing, they're just older, right? They're just, it's
Oh,
like,
right, right, right. Yeah.
yeah, there's no reason for, we're retirees, we're in our 70s, we want to live in Costa Rica. There's no reason for us to hold on to US citizenship. It's just a hassle and a drag and a real pain in the ass. And so, there's people like that who kind of come to the conclusion it doesn't affect my children at this point. Like I'm just going to renounce because it just simplifies life so radically. But it's like if there is going to be an impact on future generations, or you're cutting yourself. Like if you renounce, this is another thing because you mentioned Bitcoin Jesus. It was a very high profile thing. Like some of these, obviously, I'm in Puerto Rico. Like some of these people here, it's a little nuts when you see them running around with how much money you guys have made with crypto and all the rest. God bless them. But the idea that you're going to renounce could also lead to and have you end up being essentially denied entry back into the U.S. No?
Right. So I'll get back to it in a minute, but referring to your previous point, yes, there's a cost benefits analysis that goes on. And if you're in your 20s, you're single, you just graduated from university, you're looking for a job, the ability to move to the US on a whim and get a job there is quite a benefit. And your investment profile, your financial profile is not going to be that complex. So a lot of these firms won't apply to you. So at that point, US citizenship probably has more benefits than disadvantages. But as people get older, they're more settled and they have a more complex financial situation, then indeed the cost outweigh the benefits, and then they make the decision to renounce.
And is it an actual cost for most retirees, or is it the hassle of keeping up with the paperwork? In other words, if I'm a retiree living in Mexico or Panama or Costa Rica or someplace, is it like that they're actually it costs them a lot of money to retain U.S. citizenship when they're not spending much time in the U.S., or is it just all right? But we got to hire, we got to account, we got to come up with the receipts, we got to cover all this stuff. Is it the headache, or is it the cost financially?
Well, it's the cost of paying their accountants to prepare the tax return.
Right.
The enforcement in Mexico is not the way it is in the US or Canada, so I wouldn't necessarily say that there's an opportunity cost there. But in Canada, as I mentioned, there is an opportunity cost. There are tax benefits that Canada would provide its citizens that you cannot take advantage of because the US would tax you and offset these benefits. So it's not always an actual cost, but it's an opportunity cost of having to pay tax to Canada to avoid paying tax to the US. And the compliance cost, because these forms are so complicated that they will seldom prepare it themselves and have somebody prepare it for them, but then they need to pay that person.
Yeah.
And right, and usually they can still travel to the US. So what you refer to is the Reid Amendment that was passed in the 1990s. There was a guy, there was a guy who got Bailey citizenship by investment, renounced U.S. citizenship, and then got Belize to nominate him to be the consul of Belize to the U.S. and live in Florida with diplomatic immunity and all of that. Needless to say that people in the US were not too thrilled to see that. And so they passed the Reid Amendment to prevent people who gave up US citizenship to avoid paying US tax from ever traveling back to the US.
So
The
it
thing,
specifically, yeah, like it specifically states, you're gonna be in trouble getting back into the U.S. if you're renouncing citizenship to avoid the tax burden.
right, and they have not set a procedure to identify these people. As such, the only way they would use it is if you voluntarily say as much,
Right.
either at the
And you
time of
said
the
there are people who are dumb enough to actually admit that that's what they've done, and who I
right,
guess didn't
right.
realize, like, no, like, don't tell people that.
Yes, yes, that's
Yeah.
correct.
Well, I work for a very, very wealthy gentleman who started a company. His son told me, quote, and he was saying it tongue in cheek, that no, my father doesn't come to the U.S. anymore because he's a tax fugitive. Ha ha. But in effect, right, he makes sure that he does not spend a lot of time in the U.S. He's effectively a billionaire, I think, at this point. Or if not, he's very close to it, and has a very big publishing empire. And he still has plenty of business interests and offices and things like this throughout the U.S. and all over the world. But it's very onerous, for people who have really done well in the U.S. Man, that tax burden is really something else, and anything you can do to reduce that, if money matters
But
to you and you're doing all right, it's good to get out of. Yeah.
I mean, not just the US, that's the most unfair piece is, I mean, other countries, Canada, with France, have an exit tax. If you leave that country, you give up your tax residency, you have a deemed disposition of all of your assets, and you're taxed on that. But that's wealth that you acquired as you were living in that country. The US, on the other hand, forces that exit tax on you when you give up US citizenship. So if you've been living in Canada, New Zealand, the UK for a few decades, you built wealth there. That wealth came from these economies, from the Canadian, New Zealand, British economy. And that's wealth that the US is sucking out of that economy in the
It's
form of
claiming.
taxing you.
Yeah.
Right.
Yeah.
So
Yeah.
it's even less fair than the other. I mean, nobody likes to pay tax. Nobody likes to pay an exit tax. But there is some fairness that would come with an exit tax that would be tied with residency. That's not the
Right.
case in the US. In the US, it's tied with citizenship. And
Right.
again, they kept on taxing you even when you lived overseas.
Yes. Well, death and taxes, my friend. The as they say. Well, I think we achieved something here. You gave me a lot more clarity. I've taken up enough of your time, but I think that was super helpful and very valuable for people. If you think you're looking at perhaps making a move abroad, or even looking at a sort of second landing pad, maybe in another part of the world, especially if it's Latin America, but any place really, Olivier is a very good resource. We'll make sure we have contact info below the video here. Olivia, thank you very much for your time. I really enjoyed it.
Thank you for having me. A pleasure.